Yeah, of course, we all know the importance of having savings put aside, but with so much financial uncertainty overseas, what you do with your nest egg has never been more important than right now.
But because we're all being ultra cautious saving rather than spending our money, many banks have slashed their term deposit rates in the last 10 days. So it might be time to rethink the best way to make your money work hard for you. Money expert Anthony Bell is here to talk us through how to get the most out of our savings. Anthony, hi.
Morning.
Morning, Carl.
Interest rates down on term deposits. What should we be doing? Should we be alarmed about savings?
Look, I don't think so, Carl. I mean, telling you the word for 2011 will probably be volatility, and that has never been more true than actually the last 6 months. And you know, in the last period of time, we've seen the stock market going up and down like a roller coaster.
Yeah.
So look, I still think safety is in term deposit. The rate has come down a little bit, which is telling us that the banks think that maybe interest rates might also come down. So they're factoring those in, particularly for their 12-month and their 3-year deposit rates. So yeah, I'm not telling everyone to get out of term deposit and go and start investing in wild investments right now, because there is still uncertainty in the future.
So with these uncertain times, what are in fact the best ways to get our savings working hard for us?
Okay, so the first thing to do, Laz, is to have a look at how long term you are. So if you've got 10 years to invest your money and you're not going to need it for that long, you can probably start to stretch into more medium and long term investments and ride the stock market in blue chip shares. Like buy shares in the bank is what I say, rather than put in term deposit, because you actually get a higher return from shares in the bank than you do off term deposit.
Right.
And their businesses are sold into the future. Of course, the mining boom with shares like BHP and Rio Tinto still riding the way and looking good into the future tells us that there is good returns there, but there is risk. So I like that, and I even like property as well. I like property at that lower end investment sort of level, where there's millions of tenants and there's going to be a housing shortage into the future, so worth looking at.
Okay, so that's the situation if you've got savings. What's the news for borrowers? This is good news for borrowers.
Look, I think so, Coles. We've heard everything from the Reserve Bank in the last 60 days. We've heard they're going up, we've heard they're going down, we've heard they're going to stay the same. So I think to the home owners should actually get a break towards the back end of the year. And look, I'm tipping an interest rate cut, only by a small point, but somewhere going into Christmas, and that'll have, you know, sort of a lot of benefits. Retail really needs a boost right now because the numbers aren't great coming out, and once the market sees that interest rates are maybe not going to keep going up, they'll be more confident, and business confidence should start to improve again as well. So that small catalyst might be something that really gets our economy going again, because the two-speed economy is hurting us right now.
Yeah, right. So all indicators currently are interest rate drop. Yeah, it's not going the other way.
I think stay the same is a sure thing, and I'd factor in probably 7 out of 10 as a chance for a drop.
We'll take it. 7 out of 10. That's a good bet. Thanks, mate. Good to see you. Have a good day.
Thanks, Anthony.